Viewers at home, you are welcome to my presentation on IAS 17, International Public Sector Accounting Standards, number 17, Property, Plant and Equipment. If this is your first time of coming across my channel, or if you have not subscribed in the past, please click on the red subscribe button and turn on the notification bell icon so that you'll be able to receive a notification message each time I drop a new video. If you are a returning subscriber, I say thank you and God bless you. IAS 17, Property, Plant and Equipment. Property, plant and equipment are tangible assets that are 1. Held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. Property, plant and equipment are tangible assets held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. I repeat, property, plant and equipment are tangible assets that are held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. Property, plant and equipment are tangible assets that are expected to be used for more than one accounting period. Tangible assets that are expected to be used for more than one accounting period. That is property, plant and equipment. So examples of property, plant and equipment. Examples. Property, plant and equipment include, number 1, we have land and building. Land and building. 2, motor vehicles. Motor vehicles. 3, furniture and fittings. Plant and machinery. All these are tangible assets. I've told you that they are tangible assets expected to be used for more than one accounting period. Now, I want to define those terms which we are going to come across in IAS 17. Definition of terms. Definition of terms. Number 1, we have carrying amount. The first term I'm going to look at is carrying amount. Carrying amount is the amount at which assets are recognized. The amount at which assets are recognized in the statement of financial position after deducting accumulated depreciation and accumulated impairment loss. Carry amount, that is, you have the cost of the asset less accumulated depreciation and impairment loss. Impairment loss. When you deduct the accumulated depreciation and impairment loss from the cost of the asset, then you arrive at its carrying amount. That is the first term. The amount at which assets will be recognized in the statement of financial position after deducting accumulated depreciation and impairment loss. Then the second one is accumulated depreciation. Accumulated depreciation. This is the total depreciation on the assets to date. The total depreciation on the assets to date is said to be the accumulated depreciation. Maybe depreciation is calculated on straight line. In year 1, you have depreciation of 10,000. Year 2, you have depreciation of 10,000. Year 3, depreciation of 10,000. The total depreciation over the 3 years period is 30,000. This 30,000 is said to be the accumulated depreciation on the assets for the 3 years period. That is accumulated depreciation. The third term I'm going to look at is impairment loss. Impairment loss. What is impairment? Impairment loss, that is the third term. Impairment loss. Impairment loss is the amount by which the carrying amount of an asset exceeds its recoverable value. The excess of the carrying amount over its recoverable value is said to be the impairment loss. Impairment loss. The excess of the carrying amount of an asset over its recoverable value is said to be the impairment loss. Then what do you mean by the recoverable value? Recoverable value. In determining the recoverable value of an asset, 2 things have to be considered. Number 1, fair value less cost to sell. That is less selling expenses and value in use. The higher of these two items, that is fair value less cost to sell and value in use, will be considered as the recoverable value of an asset. When we get to the relevant IAS, then I will be able to explain that better. Number 4 is cost. Cost of an asset. Cost is the amount of cash or cash equivalent paid. The amount of cash or cash equivalent paid and fair value of the other consideration given to acquire an asset at the time of its acquisition or construction. So that is cost. Number 5 is depreciation. Depreciation is the systematic allocation of the depreciable amount. The systematic allocation of the depreciable amount of an asset over its useful life. The systematic allocation of the depreciable amount of an asset over its useful life. That is depreciation. So, what do you mean by the depreciable amount? Depreciable amount That is number 6. Depreciable amount is the cost of an asset less its residual value. Cost minus residual value. Cost minus the residual value of an asset is said to be the depreciable amount. Number 7, we have the fair value. Fair value. Fair value. Fair value is the amount for which an asset could be exchanged or liability settled between the non-legible willing parties in an arm's length transaction. The amount at which an asset could be exchanged or liability settled between the non-legible willing parties in an arm's length transaction. That is fair value. In accordance with IAS 17, what are the disclosure requirements of for PPE? The disclosure requirements for PPE. That is what I'm going to consider. By PPE, I mean the property, plant, and equipment. Disclosure requirement for PPE. That is property, plant, and equipment. That is PPE. Number 1, the method of depreciation must be disclosed. Number 1, the method of depreciation. The method of depreciation must be disclosed. Number 2, the useful life of an asset or the rate of depreciation used must equally be disclosed. The useful life of an asset or the rate of depreciation used. The useful life of an asset or the rate of depreciation used must equally be disclosed. The measurement basis used in determining the carrying amount of the asset must be disclosed. The basis of measurement. The basis of measurement used in determining the carrying amount of an asset must be disclosed. The basis of measurement, the basis of measurement used in determining the carrying amount of an asset must be disclosed. Then the gross carrying amount and accumulated depreciation at the beginning and end of the period. That is number 4. The gross carrying amount and accumulated depreciation. Depreciation at the beginning and the end of the period. All this information must be disclosed in relation to the property, plant, and equipment. The disclosure requirements for property, plant, and equipment include 1. The method of depreciation, that is the method of depreciating the asset, whether straight line or reducing balance, must be disclosed. The useful life of the asset or the rate of depreciation used must be disclosed. Maybe the asset is expected to last for 5 years or the rate used, maybe it's 20% or 30%, that must be disclosed. Number 3, the basis of measurement used in determining the carrying amount of an asset, maybe the cost or the fair value. So all those bases must be disclosed. Then the gross carrying amount. The gross carrying amount and accumulated depreciation at the beginning and the end of the period must be disclosed. These are the information that must be disclosed by the way of note in relation to the property, plant and equipment in accordance with IAS 17. IAS 17. Now, I want to consider the schedule of property, plant and equipment. Schedule of property, plant and equipment. So, schedule of property, plant and equipment, or schedule for property, plant and equipment. Schedule for property, plant and equipment. I just want to give you some specimen. I want to give you the specimen or the pro format of the property, plant and equipment. So now let's assume you have land and building, then let's assume you have furniture and fittings. Suppose you have motor vehicles. Then if you have plant and equipment, if you have leased assets, let's have the total. I just give you, it's not limited to that. So you start with the cost or valuation balance at the beginning of the period. Cost, or let me say valuation balance of fair value. Maybe 1st of January 20x9. The opening balance. So for land and building, furniture and fittings, land and building, and the total of everything. Then if you have revaluations, suppose land and building is revalued, then you have revaluation. The land and building, if it is revalued, then addition. By addition we mean acquisition or purchase. If you purchase more of furniture and plant and equipment, the total acquisition. Then if you have disposal, if you sell any of the property, plant and equipment, then that will go out of the fleet of assets. Let's assume you sell motor vehicle. So disposal, it goes out of it. That is why we have minus. Then reclassification. Supposing you want to reclassify some plant and equipment as motor vehicles, it will go out of plant and equipment then, and it will come into motor vehicles. Minus in plant and equipment because it goes out of it, then plus in motor vehicle because it is coming into motor vehicle. So then the total will be nil because this will negate this. So it will negate each other. Then you sum up this. You have the balance at the end of the period. Balance carried down. Let me say 31st of December 20x9. So you have this. Then you now have depreciation. That are starting with the opening balance brought forward. The opening balance. Then you now have charge for the year. Charge for the year. That is the depreciation that will be expensed during the period. That is charged for the year. Then you have disposal. If you sell any of the assets, it's accumulated depreciation to the point of sale have to be removed. The accumulated depreciation, the total depreciation from the date of acquisition to the point of sales. You have disposal of motor vehicle, that will go out of it. The accumulated depreciation from the date of acquisition to the point of sale, then that have to be removed. Then we have reclassification. Reclassification. Remember, we've reclassified plant and equipment. Then that means the depreciation have to leave that plant and equipment. Then it is now reclassified as motor vehicle. Then this minus this, the net difference might have it there. Then you sum up the depreciation. The accumulated depreciation to date. Balance carried down. Let's say 31st of December 20x9. Then we now have carrying amount. Carrying amount. As at 1st of January 20x9 and as at 31st of December 20x9. The carrying amount. The carrying amount as at January will be the opening balance here minus the depreciation as at the beginning. Let me put 1st of January 2 x9. The opening balance here minus the opening balance of depreciation. That will give you the carrying amount as at the beginning of the period. To give you this, the carrying amount as at the beginning. Then, to get the carrying amount at the end, you have the total of the cost column, the total of this minus the total accumulated depreciation. Then that will give you the carry amount at the end of the period. That is what you have in this column minus what you have in the total accumulated depreciation column. That will give you the carry amount at the end of the period. So I therefore want to take question as work example. This is Izikan 2020. Izikan 2020 March/July. March/July diet. So this question is going to be used as work example. And this presentation is going to be taken as part 1. Part 2 shall be considered in another presentation. I'm going to consider part 2 in a separate lecture, that is, in a separate lecture. So, we have the bursar of Amotekun State. That is the question. You may copy the question. And if you want to have my full presentation or my lecture, if you want to access it, you may type Ezikan Academy on the search menu of your YouTube app. Ezikan Academy. Ezikan Academy. Or just search Ezikan on the search menu of your YouTube app. Then it will take you to my YouTube page. Then click on my YouTube icon, my page icon. Then it will take you to another page where you are going to click on the playlist. If you look at the top of that new page, then you will see playlist. Then click on the playlist and you will see different playlists. Then click on the playlist containing the course of your choice. So to access all my videos. Now, the bursar of Amotekun State University, Okemosan, delegated the preparation of non-current assets schedule to be included in the final accounts of the university for the year ended December 31st, 2018 to one of the deputy bursars in the bursary department. Then we have in the discharge of the assignment. In the discharge of the assignment, the deputy bursar reviewed the following documents. The first one is International Public Sector Accounting Standards, IPSAS. International Public Sector Accounting Standards, IPSAS. Then previous year's financial report. Previous year financial report. Then non-current assets registered. Non-current assets registered. Then valuation reports, etc. He was able to obtain the following information. He was able to obtain the following information. We have details. We have cost of fair value as at December 31st, 2017. Then we have accumulated depreciation or amortization. Accumulated depreciation stroke amortization. We have estimated lifespan or lease period. The first asset, we have land and building. The cost is 500,000, accumulated depreciation is 50,000, and years is 50 years. Furnitures and fittings cost 180,000, accumulated depreciation of 72,000, and the life is 10 years. Office equipment cost 130,000, accumulated depreciation 65,000, the life is 8 years. Then plant and machinery cost is 190,000, accumulated depreciation is 95,000, and the useful life is 10 years. Then motor vehicles cost is 500,000, accumulated depreciation is 200,000, and the useful economic life is 5 years. Then computer equipment cost is 160,000, accumulated depreciation is 80,000, and the useful economic life of 10 years. Then equipment on lease, the cost is 105,000, accumulated depreciation is 42,000, and the useful economic life of the lease equipment is 5 years. It is the policy of the university to charge a full year's depreciation on assets irrespective of the amount of purchase or revaluation during the year, while no depreciation is charged on assets disposed. No depreciation is charged on assets disposed during the year. Then we have note 3, equipment on lease. Equipment on lease are depreciated equally. Equipment on lease are depreciated equally over the period of the lease. That is note 3. Note 4, land and building were professionally revalued. Land and building were professionally revalued during the year by Parisco and Associates, a firm of chartered surveyor. A firm, Parisco and Associates, a firm of chartered surveyor. And valuers, and approved by the State Ministry of Works. And approved by State Ministry of Works and Housing. The valuation, which was based on open market value, produced a revaluation surplus of 150 million naira over the carrying amount as at January 1, 2017. Note 5. The university ASU purchased plant and machinery which was imported from United Kingdom at a cost of 430,500,000. Installation and transportation cost to the university amounted to 20,500,000. Note 6. The deputy bursar that prepared the non-current asset schedule last year classified some of the computer equipment purchased on May 15, 2017, costing 26 million as office equipment. A reclassification is required in the current year. Note 7. Note 7. Office furniture and fitting costing 12,250,000 naira were disposed of during the year for 11,500,000, which resulted to a profit of 750,000 naira. Note 8. The university ASU entered into an equipment lease agreement with Old Finance Limited. The terms and conditions of the finance lease are as follows. We have the principal sum of 45 million, lease period of 5 years, and the lease rental is 10 million naira per annum. Note 9. During the year, the university acquired a fleet of vehicles at the cost of 50 million naira. The state government financed this acquisition. Required, prepare the non-current asset schedule of Amotekun State University, suitable for publication. So that is all about the question. So now, solution. Solution. You are going to have the title Amotekun State University. State University. You are to prepare the schedule. You are to prepare the schedule, the non-current asset schedule. The schedule of non-current assets. As at December 31st, 2018. And the assets of Amotekun States. The non-current assets of Amotekun States comprises land and building, furnitures and fittings, office equipment, plant and machinery, motor vehicles, then computer equipment, as well as equipment on lease. Now let's have them in our schedule. So now let's have this for details. Details. Then the first one is land and building. Land and building. That is the first asset. The second one is furniture and fittings. Furniture and fittings. Furniture and fittings. The third one is office equipment. Office equipment. Then we have the fourth one. We have plant and machinery. Plant and machinery. Then we also have the fifth one, motor vehicles. Motor vehicles. The sixth one, we have computer equipment. Computer equipment. The next one, we have equipment on lease. Equipment on lease. Equipment on lease. And finally, we have the total. These are the non-current assets given in the question. I've told you that the first thing to start with is the opening balance. You start with the opening balance, the cost or the fair value. The opening balance, that is cost, as at 1st of January 2018. That is the closing balance as at 31st of December 2017. You know, the closing balance as at 31st December 2017 will be the opening balance as at January 2018. So we have 500,000 for land and building, furniture of 180,000, office equipment 130,000, plant and machinery 190,000, then motor vehicles 500,000, then 160,000 for computer equipment and 105,000 for equipment on lease. So now let's write those figures. So land and building 500,000. Then furniture and fittings 180,000. Then office equipment 130,000. Then plant and machinery, and that is 190,000. Then we have motor vehicles. Motor vehicles of 500,000. 500,000. Then we also have computer equipment of 160,000. 160,000. Then we have equipment on lease. Then 105,000. 105,000. Now let's now sum them up. Let's sum up everything. That is all the opening balance in order to have the total. Now, land and building 500,000 plus furnitures and fittings 180,000 plus office equipment 130,000 plus plant and machinery 190,000 plus motor vehicles 500,000 plus computer equipment 160,000 plus equipment on lease 105,000. Then the total is 1,765,000. 1,765,000. Then you now go through the note one after the other. Let's go through the note one after the other. You know, this is note 1. All this information are contained in note 1. Now, note 2. Note 2. It is the policy of the university to charge a full year's depreciation on assets irrespective of the month of purchase or revaluation during the year. While no depreciation is charged on assets disposed. Is charged on assets disposed of during the year. So that clause is only relevant when we are calculating our depreciation. Note 3. Equipment on lease are depreciated equally over the period of the lease. That is equally relevant for the calculation of depreciation. Note 4. Land and building were professionally revalued during the year. Land and building were professionally revalued during the year by Parisco and Associates, a firm of chartered surveyors and valuers, and approved by State Ministry of Works and Housing. The valuation, which was based on open market value, produced a revaluation surplus of 150,000 over the carrying amount as at 1st of January 2017. Over the carrying amount as at 1st of January 2017. So now, what will be the carrying amount as at 1st of January 2017? The carrying amount as at 1st of January 2017. So you will need to determine that. Remember, I've told you, carrying amount is cost less accumulated depreciation. It was formerly called the net book value. Now, that is for land and building. Remember, it is land and building that was revalued. Land and building that was revalued. So now, what is the carrying amount of land and building as at January 1st, 2017? Now, land and building, the cost of land and building as at December 31st, 2017. And that was 500,000. If this is the cost, ordinarily that would have been carried amount as at 1st of January 2018. Okay? Now, December 31st, the cost 2017, the closing balance for the previous period, 500,000, less accumulated depreciation. 500,000 minus 50,000, that will mean the carrying amount as at that date is 500,000. This will have been 1st of January 2018. So that will have been 1st of January 2018. So now let's calculate let's revalue the land and building. Revaluation of land and building. Revaluation of land and building. Carrying amount. Carrying amount. You know, I've told you that this will have been, let me change it. It will have been 1st of January 2018, not 31st of December, not January 1st, 2017. So that it will correlate with the date you have here. Because this is 2017. This is 2017, December. The closing balance as at December 2017 is the opening balance as at January 2018. So if this is January 2018 or December 2017, which are the same, then this one too will be January 2018 or December 2018. So you can put, if you put December 2018, that means it agrees with what you have here. So the carrying amount there, as at that date, and you were given the cost. The cost of 500,000. Cost 500,000. Accumulated depreciation. Depreciation as at 1st of January 2018 or as at 31st December 2018, and the accumulated depreciation is 50,000. When you subtract that, that means the carrying amount. Carrying amount. This is cost as at 1st of January 2018 or 31st December 2017. You know the closing balance as at December 2017 will be the opening balance as at January 2018. So the carrying amount now will be as at 1st of January 2018, or you put 31st December 2017, and that will be 450,000. That is the carrying amount. And you were told that it was revalued upwards by 150 million. The valuation, which was based on open market value, produced a revaluation surplus of 150 million over the carrying amount as at January 1st, 2018. So now let's have the revaluation surplus. Revaluation surplus. Revaluation surplus, which is 150 million. If you add 150 million to 450 million, then you'll be having 600 million. This is the carrying amount as at this is the value as at December 31st, 2018. But the opening balance was 500,000 given in the question. If you subtract the opening balance of 500,000, that means you have the revaluation surplus. Revaluation surplus of 100,000 during the year. So the asset that was revalued is land and building. So revaluation surplus, that is working one. We have 100,000 for land and building, and that is the only asset that was revalued. So you will also have that same 100,000 under the total column. Same 100,000 under the total column, since that is the only asset that was revalued that produces the revaluation surplus. Now, we have dealt with note 4, which is all about the revaluation of land and building. Note 5 now. The university ASU purchased plant and machinery which was imported from United Kingdom at a cost of 430,500,000. Installation cost. Installation and transportation cost. Installation and transportation cost. That is note 5. and transportation costs to the university amounted to 20,500,000. That shows that there is an acquisition of plant and machinery during the period. There is acquisition, that is purchases of plant and machinery. That is working two. Acquisition or purchase of plant and machinery. It cost 430,500,000. 430,500,000. 500,000. Then the cost of installation and transportation cost. Installation and transportation cost to the university amounted to 20.5 million. So now let's have the installation and transport cost. And transport cost, and that is 20,500,000. So when you sum it up, you have 451,000. 451,000. That is an addition to plant and machinery. That is an addition. Addition means purchase. So that is addition. That is working two to plant and machinery. And we have 451,000. Plant and machinery, which is 451,000. And that information is contained in note 4. That is all about note 4. Then note 5. The university ASU purchase plant and machinery. Okay, that is note 5, which has been dealt with. Note 6 now. The deputy bursar that prepared the non-current asset schedule last year classified some of the computer equipment purchased on May 15, 2017, costing 26 million as office equipment. A reclassification is required. These have been wrongly classified as office equipment. It is ought to have been classified as computer equipment. Since it was wrongly classified as office equipment, we are going to remove it from office equipment. Then you bring it back to computer equipment. So that is reclassification. And the value is 26 million. 26 million. That is reclassification. 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 We want to remove it from office equipment. Then our office equipment, this is the column for office equipment, 26 million. It is going out of that, and it is coming back to computer equipment because it is ought to have been classified as computer equipment. Computer equipment, 26 million. So it is negative here and positive here. This will be, it will negate each other. Minus this plus this will be minus. It will be nil. It will be nil. That is note 6. Note 7 now. Office furnitures and fittings costing 12,250,000 were disposed of during the year for 11.5 million. This is a disposal of office furniture. Disposal of office furniture because it was sold. By disposal we mean sales. Disposal of an asset we mean sales of an asset. It was office furniture that was sold. The cost was 12,250,000. That is the amount it's worth as at the time of purchase, but were disposed of during the year for 11.5 million. This is the proceed. The proceed from disposal is 11.5 million, which resulted to a profit of 750,000. Remember, we used to have a profit when the carrying amount exceeds. We used to have the profit when the proceeds exceed the carrying amount. So now, a disposal of office furniture. So, what we need to include under this is, what we need to include here is the cost. Why its depreciation will be included when we get to depreciation column. But let me calculate that depreciation. Now we have, okay, let me put the disposal here. Disposal. I've told you that it is the cost we are going to include here. The cost. No, at the time of purchase, it cost 12,250,000. Office furniture and fitting costing 12,250,000 were disposed of during the year. So this is the cost. So now you include it under the office furniture column. 12,250,000. 12,250,000. Since it is disposal, it is going out of the fleet of asset. Note 8. Note 8. The university ASU entered into an equipment lease agreement with Ode Finance Limited, with Ode Finance Limited. The terms and conditions of the finance lease are as follows. The principal sum is 45 million. The lease period is 5 years and the lease rental is 10 million. So that 45 million will be taken to be the fair value of that lease. So, and that will be included under the lease addition. So, it's an addition to the lease. So, where you have addition. So, addition, you have addition, no addition to land and building, no addition to furnitures and fittings, no addition to office equipment, no addition, the addition to plant and machinery has been considered. So we've not seen any addition to motor vehicle. Then we've not seen any addition to computer equipment. Then we have an addition to lease equipment on lease, and that is 45 million. That is note 8. Note 9. During the year, the university acquired a fleet of vehicles at a cost of 50 million. The state government financed this acquisition. There is an addition to vehicle, and that is 50 million. 50 million an addition to vehicles. So addition to vehicles. So additions. No addition to land and building. No additions to furnitures. No addition to office equipment. This is an addition to plant and machinery which has been considered. Then there is an addition of 50,000 to vehicles. So 50,000. All these are the costs. And all the notes has been dealt with. Then the next thing is to cast, to sum up this. And that will be the balance asset balance as at 31st of December 2018. If you add 500,000 and 100,000, that would be 600,000. 180,000 minus 12,250, and that will be 167,750. 130,000 minus 26,000, and that will give us 104,000. Now, let me consider the disposal of office furniture so that I'll be able to rub up that. Disposal of office furniture. That is note 7. Note 7. Office furniture and fittings costing 12,250,000. The 12 million has been included. 12,250,000 has been included. Were disposed of during the year for 11.5 million. That is the proceed, which resulted to a profit of 750,000. So that means you are given the proceed. Proceeds from disposal of 11.5 million. It was sold at a profit. Profit from disposal. And that is 750,000. If you subtract the profit, then you will have let me use the calculator. 11.5 million minus 750,000. Then we have 10,750,000. 10,750,000. Ordinarily, this will be the carrying amount. The cost was given to be 12,250,000. If you subtract 12,250,000, then you have the accumulated depreciation. Accumulated depreciation minus 12,250. You have 1,500. That is the depreciation relating to the disposal of office furniture. Now, we want to consider the depreciation now. Depreciation. I've told you that under this depreciation, you are starting with opening balance. That is the one as at 1st of January 2018. I've told you that the closing balance as at 31st of January 2017 will be the opening balance as at January 2018. You were given the depreciation, accumulated depreciation stroke amortization for land and building 50,000, 72,000 for office furniture, for furnitures and fittings, office equipment 65,000, plant and machinery 95,000, motor vehicles 200,000, computer equipment of 80,000, and 42,000 for equipment on lease. Now, remember the lease period is 5 years. So that when we get to lease, we use 5 years. Let me sum up. Let's sum up this. 190,000 plus 451,000. Then the total is 641,000. 641,000. 50,000. Then 500,000 plus 50,000, that will be 550,000. This will be 160,000 plus 26,000, which is 186,000. 105,000 plus 45,000, that will be 150,000. 1 million. Okay, now the addition. Let's sum up the addition. 451,000 plus 50,000, that will be 501,000 plus 45,000, and that will be 546,000. That is the total of the addition. 546,000 addition. That is, by the time you sum up this in the column of addition, 546,000. When you now add these three, the total is 2. Okay, then the disposal of 12,250,000. Then let's also include it in the total column. 12,250,000. So this plus this plus this minus this, then you have 2,398,000. 2,398,750. After that, we want to deal with the depreciation. Now, let's start with the opening balance as it was given. 50,000, 72,000, 65,000, 95,000, 200,000, 80,000, and 42,000. The opening balance of the depreciation. So we have for land and building 50,000. Then 72,000 for furniture and fittings. Then 65,000 for office equipment. Then we have 95,000 for plant and machinery. That is 95,000. Then we have 200,000 for motor vehicles. Then we have 80,000 for computer equipment. Then we have 42,000 for equipment on lease. Now let's now sum it up. 50,000 plus 72,000 plus 65,000 plus 95,000 plus 200,000 plus 80,000 plus 42,000. Total 604,000. 604,000. Then the next thing is the depreciation charge for the year. Depreciation charge for the year. So we want to include the depreciation charge for the year. So we put charge for the year. Charge for the year. Now, let's go back to note 2. Note 2, you were told that it is the policy of the university to charge a full year depreciation on assets, irrespective of the month of purchase or revaluation during the year, while no depreciation is charged on the disposal. No depreciation is charged on asset disposal during the year. So you charge full year depreciation, irrespective of the date of acquisition or revaluation. Remember, land was revalued. Ordinarily, since land, the life of the land is 50 years. Depreciation will have been divided by 50. 500,000 divided by 50, and that will be 10,000 per annum. That means this 50,000 will have been charged for 5 years. 50,000 divided by 10,000, that will be 5 years. This 50,000 is an accumulated depreciation of 5 years period. Now, since land has been revalued, that means out of 50 years of the life of the land and building, 5 years has expired. If 5 years of its life has expired, then you'll be left with the unexpired life of 45 years. That is 50 years minus 5 years. So now, let's go back to the working. So, working for. Remember, depreciation on land and building, 500,000 divided by 50. That will be the annual depreciation of land and building. Land and building. And building annual depreciation. And that is 500,000 divided by the life of 50. That will give us 10,000. And this is the annual depreciation on land and building. If the annual depreciation is 10,000 and the accumulated depreciation for prior periods in respect of land and building is 50,000. This 50,000, that will be an equivalent of 5 years depreciation. The number of years, number of expired life. Since we are given 50 years as the accumulated depreciation for prior period that have been charged, and what have been charged every year is 10,000. That means 5 years has expired. 50,000 divided by 10,000, that is 5 years. Then the unexpired life now. Unexpired life, that will be 50 years minus 5 years. 50 years minus 5 years. And that will be 45 years. $45 years. And remember, you were told that you charge full year depreciation. Full year's depreciation on asset, irrespective of the month of purchase or revaluation during the year. And you don't charge depreciation on disposal. That is based on the question that no depreciation should be charged on asset disposed of during the year. So now, the depreciation that will now be calculated on the remaining cost of the asset. You know, you are now having 600,000 at the value of land and building. Land and building is now 600,000. You now apportion the 600,000 over the unexpired life of 45 years. So depreciation now, that will be charged. Depreciation will now be 600,000 divided by the remaining life, which is 45 years. And that will give us the depreciation of 13,333. So we now have 13,000 333 as depreciation. So the depreciation charge for the year for land and building is 13,333. Then for furniture and fittings, the depreciation, furniture and fittings was not revalued. Since it was not revalued, then just apportion this by the life of that furniture and fittings. The useful life of the furniture and fittings is 10 years. It is 10 years. So apportion this over 10 years, the amount of depreciation that will be expensed in respect of furniture and fittings, you have 167,750 divided by 10. Then you have 16,775. Then for office equipment, you have 104,000. How many life? The office equipment is expected to last for 8 years. Then apportion that over 8 years. 104,000 divided by 8, and that will give us 104,000 divided by 8. Then we have 13,000. Then for plant and machinery, you have 641,000. Then the life of plant and machinery is 10 years. Plant and machinery, and that is 10 years. Then you apportion 641,000 over 10 years period. Then you have 64,000. This divided by 10. You have 641,000 divided by 10, 64,100. Then the next one is motor vehicles. Motor vehicles, and you are having 550,000. What is the life of motor vehicles? Then you have 5 years. 5 years. Motor vehicles, 5 years. Then divide that 550,000. The 550,000 by 5. 550,000 divided by 5. Then you have 110,000. 110,000. For computer equipment, the life of computer equipment is 10 years, and you have 186,000 for computer equipment, which is 186,000. 186,000 divided by 10, then you have 18,600. Then we also have equipment on lease. You have been told that equipment on lease is, the lease period is 5 years, and you have 150,000. 5 years. Equipment on lease is 5 years. The lease period, when you divide the 150,000 by 5, 150,000 by 5, then you have 30,000. So you now sum up all these depreciation charge for the year. Depreciation charge for the year, 13,333 plus 16,775 plus 13,000 plus 64,100 plus 110,000 plus 18,600 plus 30,000. Then you have 265,808. 265,808. 265,808. That is the total of the depreciation charge for the year. Remember, office furniture was disposed during the year. The depreciation attributable to the furniture disposed has been calculated in our working form, and that is 1,500. So you have the disposal of furniture, disposal, you put disposal, 1,500. You are going to subtract that 1,500. That is working for. You subtract 1,500 from the depreciation attributable to the furniture, 1,500. Then the furniture is, this is furniture column. So subtract 1,500. Then you also remove that 1,500 from the total column. Now let's subtract it from the total column. 1,500. Then there is a reclassification. Reclassification. So one asset was reclassified as another. Then let's have that as working 5. Reclassification. Working 5. Reclassification or working 6. Reclassification. The asset that was reclassified. Now let's check. Reclassification. The asset that was reclassified, 26,000, and that is office equipment. Now, what is the life of office equipment? It was 8 years. Office equipment, 8 years. Then the depreciation that have been charged so far on the office equipment that was reclassified. Down, reclassification. Office equipment, which is 26,000 divided by 8. 26,000 divided by 8. Then we have 3,250. 3,250. Then, since you are removing it from office equipment, so reclassification. You are removing it from office equipment. The office equipment was reclassified as computer equipment. That means the depreciation too have to be reclassified. The office equipment was reclassified. So you are going to reclassify the depreciation also, which is 3,250. And that same asset that was reclassified from office equipment as computer equipment, it is coming into computer equipment. That is why we have it as positive in computer equipment. Then the depreciation now that will be charged also will be held positive. You are going to add it. But remember, if this 26,000 is to be depreciated on computer equipment, how many years will it be depreciated? So the useful life of computer equipment is 10 years. Computer equipment is 10 years. So now, if you depreciate the computer equipment, 26,000 reclassification, computer equipment, the depreciation will be 26,000 divided by 10 years. That will be 2,600. Then you put 2,600 under computer equipment. So 2,600 positive there. Then when you sum up this is minus 3,250 and this is plus 2,600. Then the negative will exceed the positive by 650. So that means we are going to have minus 650 here on that total column. So you now balance your depreciation. You balance your depreciation. Balance at the end of the period. Then balance So balance as at 31st of December 2018. You sum up the depreciation. 50,000 plus 13,333 will be 63,333. You now have carrying amount. Carrying amount. The one as at 1st of January 2018 and the one as at 31st of December 2018. To get the carrying amount as at 1st of January 2018, I said you take the opening balance here, which is 500,000 minus the opening balance of depreciation, which is 50,000. 500,000 minus 50,000 will give us 450,000. 450,000. Then the closing balance. You take the total column here minus the total column. So that means you have 600,000 minus 63,333. Then you have 536,667. 536,667. Then when you sum up this depreciation column, 72,000 plus 16,775 minus 1,500. Then you have 87,275. 87,275. So when you sum up this column, so this one will be 74,750. 74,750. This column will be 95,000 plus 64,100. 159,100. 200,000 plus 110,000. That would be 310,000. Then 80,000 plus 18,600 plus 26. That will be one. That will cast 80,000 plus 18,600. That will be 98,600 plus 26. That will be 101,200. 101,200. If you add this will be 72,000. The total column 604,000 plus 265,808 minus 1,500 minus 650. You have 867,658. The carry amount at the beginning of the period now. I've told you that you take the opening balance. The opening balance for office furniture is 180,000 minus opening balance of depreciation of 72,000. Then you have the opening balance of carry amount, and that will be 108,000. 108,000. Opening balance, the closing balance 167,750 minus 87,275. The closing balance will be 80,475. 80,475. Then that of office equipment. Office equipment, we have opening balance 65,000. While the closing balance will be 29,250. 29,250. Then we have the plant and machinery. Opening balance. Remember, opening balance of cost minus opening balance depreciation. The plant and machinery. Then we have 95,000 and 481,900. Then for motor vehicles, opening balance of 500 thousand minus opening balance of 200,000. That will be 300,000. 300,000. Then the closing balance of 550,000 minus the closing balance of 310,000. 550,000 minus 310, you have 240,000 as the closing balance. 240,000. Then for computer equipment, 160,000 opening balance minus opening balance of 80,000 also. Then you have the opening balance of 80,000. 160,000 minus 80,000, that will be 80,000. Then you have the closing balance of 186,000. 186,000 minus 101,200. Then you have 84,800. 84,800. Then for equipment on lease, opening balance of 105,000 minus opening balance of 42,000 in respect of depreciation. Then you have 63,000. 63,000. If you subtract the closing balance, you have 78,000. You have the opening balance of total of 1,765,000 minus opening balance of depreciation of 604,000. Then you have 1,161,000. 1,161,000. Then you have the closing balance of 2,398,750 minus 867,658. Then you have 1,531,092. This is the part 1 of my presentation on IAS 17. Please be expecting the part 2. Thanks.